there, everyone, and welcome to this special edition of the Final Bar Top 10 Charts to Watch for July 2024. It's been a great time, honestly, every month with Grayson Roze sitting down, talking through the markets overall, but really focusing on actionable ideas. So I'm Dave Keller, the Chief Market Strategist here at Stockcharts.com, joined again by Grayson Roze. Grayson, as we're preparing, we're each picking 5 stocks, bringing them together. It's been cool kind of doing this with a regular cadence. How did this time feel relative to earlier in the year?
Interesting time in the markets, right?
Yeah.
I mean, there's, I think, having sort of a cautious approach right now is justified, totally warranted. Little harder to find names, I think, that are setting up. We kind of talked about this last time.
Yep.
There's a lot of names that are just steadily trending higher, and if you want to just say this thing's been going up for 9 months, 12 months, 18 months, whatever it is, I'm going to own it, then it's easy to find those kinds of names. Breakouts, a little harder to find. That's what I like to look for, as we always talk about, and it's getting pretty tough to find those breakouts.
It's not a breakout time, I feel like. Yeah, no, that's true. It's interesting. This Peter Lynch famously said, and I'm going to totally misquote him, but it was something about how people spend way too much time trying to prepare for corrections, and then the actual losses you would experience, something like that, which basically trying to anticipate a correction while it seems like a really good thing to do. At the end of the day, like when things are working, you just ride it as long as possible. I think that's a similarity with our toolkit. And I'm finding that with the chart of the S&P and the NASDAQ. We're having little pullbacks, but we keep making new highs when we go up. And when we stop making new highs, right? Or as I say, when we attempt to make a new high but fail to do so, then we can be concerned. But overall, we're still kind of
moving up. Yeah.
With that in mind, let's hit chart number 1. It's yours. Where are we going to go?
Chart number 1 for me. We are in the technology space. This is an interesting name because it has had a pretty tough 2024. My first pick is going to be Adobe, ADBE. Big name, right? You know, one of those huge tech companies, storied tech companies, been around for so long. What's interesting about Adobe is that they have a huge AI play to it. Not in the, hey, we're providing AI tools, ChatGPT kind of thing, that type of thing. But in sort of a creative way, right? So you can bring those AI tools into the Adobe suite and all that. Super diversified company too. They've got some amazing products across a whole bunch of different spaces. So from a company standpoint, really interesting. Like I said though, tough 2024. I think it was a bad earnings report earlier this year, and they had a big deal with a company called Figma that fell apart. So tough 2024. Big pop though, pretty recently. And what we're seeing here in Adobe is that it's starting to get back up into some really interesting technical levels. So in the short term, we're looking at a 1.5-year chart here. We're kind of pressing up against the underside of the 200-day moving average, still sitting a little bit below it. But when we actually look at kind of where we are, that red dashed line that goes across the screen, that horizontal line, that's a feature of ACP here that's the last price reference line. So that tells you exactly where we're trading right now. When you look at that line, you can see that we're starting to take out some pretty key price levels. We're getting back into that consolidation range that we saw kind of in the back half of 2023. And we are starting to get back up into this big, ugly gap from March of this year, too. So really interesting time to be watching Adobe. If this thing can keep riding higher, if it can start to clear some of those moving averages, clear some more of those price levels, I think there's a lot to love about Adobe. We're seeing the relative strength pick up as well. This thing is starting to outperform the market, getting a little bit of love once again. But what's really interesting here too, with ACP, you can actually zoom out really easily. We can see that, again, that last price reference line, we can see how crucial some of these price levels are. So this is going all the way back to the peak that we saw in 2020. We're finally back above that level. We're kind of chopping around it. There's a lot of support and resistance dynamics in this name right now. So I think there's a lot of things going on. Technically, an interesting one to watch. Also, you know, as far as the theme right now with some of the AI stuff that's going on, everyone loves to talk about that. Adobe has a place in that discussion. So really interesting name right now. I want to see this thing continue to move higher, take out some more of those levels. But definitely one that I'm watching right now.
This is an interesting one because it's been kind of a gappy period here recently. I feel like there've been a lot of gaps on a lot of like FedEx.
Yeah,
gap,
let's
tire
zoom
today.
back into that.
How do you deal with this sort of gap? I mean, do you have a general way of approaching a name like this when you've had that big? Because a lot of people get really scared out when you've had that big gap. Like, did I miss it?
It's true.
How do you approach it?
I like to ignore the gap, not ignore the gap, but I like to look through the gap, right? So you can look at this chart. Now we're looking at a 1-year chart of Adobe. You can focus on this gap and focus on the top of the gap, focus on the bottom of the gap. But you can also look through the gap and focus on some of the support and resistance levels on the other side of it. So look back on the left side of this gap. There's a lot going on here that tells you about how we might trade as we get into that gap.
Yep.
So I'm actually kind of looking more to some of these, like I said, support and resistance points on this chart. Some of these interesting candles that catch my eye. And those are kind of the levels within that gap that I'm going to start really, really watching.
Yeah.
What's interesting here, I mean, this to me, I call this an indecision candle. You've got, you're chopping around quite a lot, and we end up basically opening and closing at the same point of the day, right? So look at that sort of indecision candle sitting in the middle of that gap, and look how we've really run up kind of against that point. We've really been struggling with that point. So I'm, like I said, kind of looking through the gap, looking to some of the other price levels that might indicate how we're going to trade around that. But still looking at the top and the bottom of that gap, and they're key price levels to watch. So a couple thoughts there.
I love it. All right, my first chart, maybe a boring selection given where we're at in this cycle, but I'm going with Amazon, and because if it's charts to watch, I think the mega cap growth trade has dominated. Amazon has actually underperformed a lot of the other Magnificent Seven names for a little while, but it's managing to pound out a new 52-week high this week.
Yeah.
What's interesting about a chart like Amazon, like some of these other names, they've kind of stalled out a little bit. The long-term trend obviously is still quite robust, but in the short term, right, look at the last couple months from April, May, June, Amazon's more consolidating. It's more sort of choppy, sloppy, sideways. What's interesting about the chart of Amazon for me, though, is if you look at the April low, you had this gap candle where we sort of gapped lower but closed much higher. You see another time here, 175, same level. There's a clear floor there. So what I like about this chart, your sort of downside exposure, in my opinion, is clearly well defined. So if you own a chart like this now, you assume risk down to 175. You're betting, I think we could go much higher, and I'm limiting my downside to those previous lows. That seems like a bet I'd probably, generally speaking, be willing to make on a chart like Amazon, right? Because you're betting on a winning name like this, which has stood the test of time in a lot of ways, continuing to be positive. And if this is the beginning of something, this basing pattern, while it looks very small, is actually pretty big. And that's what's happened to a lot of these big names, right? They've had such a run that these movements are actually pretty wide. So there's a lot of upside potential on a chart like this if it continues to work. So I'm concerned about the potential of a market top in the summer. But an Amazon looking like this tells me that the risk is really not there yet.
Yeah, and you can define it so easily. It's a beautiful consolidation range within a broader uptrend. I want to ask you, how are you thinking about the weekly chart on something like Amazon? Because when I hear someone mention that name, I instantly jump out to that. Look at that thing.
So what's interesting is we're really close to where I think you can declare it's a new breakout. And that's the other thing, right? When you take a step back and think about the bigger picture, could this be the part of a much larger structure where we're actually going much higher? I mean, this is essentially you could think of this as a primary bullish trend, which I think is fair. But if you go back for the last 5 years, I mean, Amazon has essentially been range bound, which is kind of a funny thing to say, but around 80, 85 on the lower end and 180 to 190 on the upper end. And if we're just breaking out of that base, that shows you, really on the multi-year time frame, what sort of upside potential there could be. So that has been, I think, a question mark on a lot of charts as they sort of retest significant resistance. This is the 21 high that we're testing. We're kind of almost breaking out now.
This is the chart that not enough people are talking about to me. Everyone's so obsessed with Apple, Microsoft, NVIDIA, all of the big names. Amazon is just not getting the attention that I think it deserves, especially as a $2 trillion company is threatening to break out. Oof,
Starting to work yet again.
That's a great one to watch.
All right, chart number 2. What is it?
Chart number 2 for me is one pick within a broader space. So we're going to go with Hack. This is a cybersecurity ETF. Really interesting space right now. Bunch of ways to play this. Hack is just one of them. Obviously, you can go after some of the individual names in this space. CrowdStrike is one of the ones that people love to talk about. Palo Alto Networks, another one. There's a ton of names in this space. Some huge companies. Cybersecurity ETF, though, there's a couple of different ways to play this. Bug is another one. Cyber is another one. There's a lot of them. Hack looks really good to me right now, though. And what's interesting is that this space overall looks really, really interesting to me right now. I struggle, again, we're thinking about the AI theme and all that stuff. I just struggle to think that cybersecurity, with everything moving to AI-driven everything, struggle to think that cybersecurity is not going to continue to become more and more and more important.
It's not going to be a smaller issue. Right?
It's not. We just had a huge hack of all of these car dealership networks just about a week ago. So this is a theme that just intuitively makes a lot of sense to me. But what's interesting too is that the space technically looks fantastic right now.
Yep.
We have been consolidating for 2024. We did print new highs in kind of mid-February. But really, when you think out a little bit more, we've been consolidating for the most part of 2024 after a nice run higher in 2023. Again, look at that last price reference line, that dashed line that's going across here, and you can see exactly how many price levels we're chopping across here. We're trading above key moving averages. We're trading above the 20. We're trading above the 50. We're trading above the 200. That 50 has been coming down, but what it's starting to do is turn a little bit higher. So in addition to price moving up, bouncing off of the 20-day, we're seeing the 50-day finally start to roll over. If those moving averages can start to roll higher, and you see this thing continue to climb, and you see the relative strength continue to pick up, kind of reverse what we've seen in 2024, I think this makes a lot of sense. There are definitely some sort of breakout levels to watch here. A lot of price levels to watch. A little bit of overhead supply, which is kind of a concern for me.
Yep.
But again, when you think a little bit more broadly, kind of think out a few years, this could be one of those longer-term spaces that's just one you got to keep an eye on. So I like what I'm seeing here for Hack in the short term, but also in the long term, I think this makes a lot of sense.
This is another one where the daily chart really is showing a bit of a rotation. We're kind of bumping up against resistance, but the weekly chart really shows how this could be just a corrective move within a much sort of larger term. And I mean, this is setting up with arguably a beautiful cup and handle kind of pattern, which I like, which is that big rounded bottoming pattern. So how important is that break above, to new highs?
This is, I think, the interesting part of this pick too. So, you've got that kind of short-term breakout that you might want to be able to, play. But if you think a little bit more broadly and you pull up that long-term perspective, if you draw that line a little higher, kind of up near 67, this could be setting up for a beautiful cup and handle, like you said. And that's really when this thing becomes something to watch for me. Once it trades up near that 67 level, that could be the move that you really, really want to catch. So it could be an opportunity to play it here in the short term, but for that longer term move, could be another opportunity a little bit higher up too. So
I love that one.
To watch.
Hack has come up before too, right? Or some cybersecurity ETFs we've peppered in before, right?
Cyber or Bug, there are a couple different ones. I think Bug goes after more of the small cap cybersecurity names. It's an equal weight fund if I remember correctly. Cyber is another one that you can play. There's a lot of them, but they all kind of move together, and that movement right now is looking pretty good to me. Definitely catching my eye.
Good example. All right, my second pick.
What do you got?
Kind of old school, AT&T. So how bullish do you want to be if AT&T is this good of an idea? But hear me out. So number one, I'm doing an unadjusted chart, and I think that's important when you're looking at a high-yielding name like an AT&T. With so many big growthy names we look at, they don't pay much of a dividend, so it doesn't really make a huge difference. But big real estate companies, utilities like staple stocks, and AT&T with paying a healthy dividend, I think you want to unadjust the data, which means you're taking the dividend adjustments or you're putting the gaps back on the chart. But this really shows you where AT&T is traded. And when you do that, you can see it's really had a nice rotation. The second half of 2023 was actually pretty decent for AT&T. It was outperforming because other things were really struggling kind of in that September, October low. AT&T actually made it a higher low in October before rallying into year end. But 2024 has been a sideways year for AT&T, and again, on an unadjusted basis. But a couple things have started to change. Number one, the moving averages are now really starting to slope upwards, which is something I'd like. That shows you that the trend overall is improving. The momentum has been consistently strong. So the RSI has really been above 50 since the end of April, showing you that, again, there's strength, internal strength to those price swings of higher highs and higher lows. And now we're making a new 52-week high this week as we make a higher low around 1750, and we sort of break out here. What I love about a chart like this, there are a lot of different ways to think about downside risk. I like what I always call a natural stop. When you look at the chart, there's kind of this natural place where it appears like a good place to put a stop, right? If you sort of look down, you can see that obvious place. I think the 50-day, the recent swing low around 1750, that means, as long as we hold that, this primary structure is still pretty positive, and you're betting on the opportunity to retest those highs from the first half of 2023, kind of limiting your downside. That upside potential in terms of capital appreciation, along with the dividend, which means if this does keep working, you get really juiced with an income component through the dividend yield. I think that's pretty. It's a pretty decent combination, and it's a great way to cushion yourself from potential market downside because then you have that income component with a lot of the growthy stuff doesn't have, obviously.
Yeah. I like this. I like this name. One thing that I would ask you to highlight real quick, because it's such a great point about the dividend adjustment versus unadjustment.
Yeah.
Up top, that little gears icon, we can now actually flip. Yeah, that one. We can turn dividend adjustment on or off, sort of on the fly. Really easy to do there on the Sharp Charts workbench. We got the same thing in ACP too, down in the bottom right corner. A really great trick. I'm glad that you brought that up. I'm glad that we've got a high yielder here to play with too.
Yeah, right.
It makes a huge difference.
It really does. And there are times when adjusting for dividends, I would say for most people, most of the time it makes sense.
Yeah.
And that was something John Murphy sort of determined a long time ago was your indicators, you want them to be based on investor behavior and buy and sell decisions. And by adjusting for dividends, you're adjusting the data series to really reflect fear and greed, that emotional gameplay. And that's what I think RSI is really intended to measure. Yeah. So I kind of like that. But if you're really focusing on price levels, you're really talking about breakouts and breakdowns on, again, stocks with that pay a decent dividend. And I love being able to go back and forth, which is a feature that I think is really valuable.
Yeah. So I do want to ask you, though, on that topic. Right now, you mentioned that you're a little cautious on the market, expecting maybe a top in the summer. So the opportunity to pick up some yield, is that another sort of feather in the cap of AT&T when you think about picking it here?
Absolutely. Because I think the challenge is, do you go way defensive and do you buy a bunch of like utilities and REITs and Coke and just try to ride things? I mean, that is one way to do it. But as a trend follower, I want to follow trends. So in this sort of environment, when you're concerned about market downside, I like looking for higher yielding names that are in good uptrends. The good news is the scanning engine is perfectly designed for that sort of factor analysis. I want a dividend yield above X. I want a trend in a certain phase. So I want the moving average sloping upwards. I want a certain return year to date. You can do all those sorts of things and find names like AT&T that have both of those layers. And I just think that's a great way to follow trends, but follow trends in names that have a higher income, which I think is a good combination here.
I like that. I like that. Good pick.
Keep it going. What's number 3?
Number 3 for me is going to be ICE, Intercontinental Exchange. This is the parent company of the NYSE. Okay. So think about that for a second. This is the parent company of the NYSE. This is a pretty big company. This is probably not a company that's going to go bankrupt anytime soon. If you are worried about the market right now, you don't want to get overextended in big growthy names like NVIDIA, this might be a great place for you to go. Because if the market cools off, I just doubt that ICE is going to cool off at the same rate that NVIDIA or some of these other extended names are going to cool off.
Right.
So could be an interesting place to go for a little bit of downside protection potentially. Well, not really protection, but outperformance. But also technically right now, ICE looks fantastic. I really like the chart of this. I don't love the relative strength. That's the one sort of limit on this chart. But technically, when we just look at the price action, this thing is moving higher. It's moving up and to the right, and it's trying to make a breakout, and that's the type of thing that I like to look for. So we're seeing the moving averages all in the correct order for me, the 20 above the 50, above the 200. We're seeing this thing continue to move higher above those moving averages, holding the 20 really nicely. That's actually been a nice kind of short-term boost for this thing. And we've been consolidating a little bit for a couple of months, but we're just now setting up at some of those key price levels for a nice breakout. So I want to see this thing continue to move higher. That's why it's one to watch for this month. Not quite there yet, but if this thing can continue to ride that 20-day moving average higher, I think it's really setting up for a nice breakout here. The other thing that's interesting, if we step back to the weekly chart, this is a name that's had a very steady trend generally for a very long time. Market's been choppy in the last couple of years, so we've really been consolidating since 2022, kind of the end of 2021. This has now made its way back up to those highs. We are starting to break out as well on the weekly. This is a little bit, it's a really choppy extended pattern, but a little bit of a breakout retest and potentially a bounce. So if we can make our way back up to those highs, on the long term, I think that ICE has a beautiful chart here as well. And again, one of those names that's just steady, stable. I don't think that you're going to be disappointed as a shareholder in ICE, the parent company in the NYSE. That's one that you can just kind of sleep easy at night knowing that you own it. So long term, beautiful thing. Short term, got a lot of potential as well.
It's so fun. I mean, as a non-technical comment, what's so interesting, I mean, ICE and other exchanges really are technology companies at this point, right? I mean, it's data management and all of that. And arguably, I mean, with financial trading, AI was adopted a long time ago. We were doing algorithmic trading a long time ago, which was primitive versions of AI and trying to optimize trading. So these are companies that have really been at the forefront of developing those capabilities. So if you're looking for other ways to play that AI trade, this is sort of an interesting one. I think a lot of people still think of exchanges as sort of like an old school thing. The business model is very technology forward. I mean, that's kind of where they're aiming, right?
I mean, you and I have been on the floor together and in the ICE headquarters. I mean, you realize how big of a company it is, but how tech forward it is, how kind of on top of everything they are. It's a really, really interesting name. Just as a business, just as a company, it's interesting.
True.
But technically, got a lot to like right now.
Shout out to Jay Woods and our friends on the floor of the New York
Shout out
Stock
to Jay.
Exchange, as always. All right, my third pick is going to be Charter Communications. This is probably a very different chart than a lot of the ones we've talked about, because this is one that's more of a bottom fishing type of candidate. But I would argue I like charts like this that are bottom fishing candidates in that it's overall had a pretty rough 6 to 12 months, but it's starting to show signs of improvement, which I think as a trend follower, it's hard to buy weakness because you're fighting that, the trend which is going down. But something like Charter has really started to show more constructive rotation. And I think that's, for me, what I'm looking for. So I would never buy a Charter in like kind of February, March when it's going lower. And you actually had a bullish momentum divergence that really didn't play out. This was in February and March, where we had lower lows in price and higher peaks in momentum. You can see the RSI never really got above 50. We never really made a new swing high. So you never had that follow through that told you that might be a bottom. Okay, it actually is. You never had that follow through. I think we've now seen that in May and June. We made a big low. Intraday got down below 240 briefly in late April, but really stabilized kind of in this 255, 260 range. And now everything's kind of changed. And I feel like this chart before April and this chart after April, two very different charts. Now we're making higher highs and higher lows. The 50-day moving average has sloped higher, and we're now back above it. The momentum, right? The RSI is now consistently above 50 instead of consistently below 50. So I think things have changed, what I would call a change of character on the chart.
Clear.
So I think, buying a chart like this here, you're betting on basically a return back to at least the 200-day moving average, filling that gap from February. I mean, if you look at the chart here, it was holding support until this big gap, and then it continued to go lower, and really through the end of April, 3 months of just deterioration. Now I feel like we're starting to make some further gains. Personally, I'd probably wait for us to get above that resistance around 300. And so it's sort of like an if-then statement if you're a programmer. If we get above 300, I'd like to move back to the 200 days. So this isn't the type of chart I normally like. I'd much rather buy some of the breakout potential candidates we've talked about. But a chart like this that hasn't been beaten down, that shows you that the character is changing, I think could be an interesting trade to go back to moving average resistance.
Yeah. I love charts like this, though, and trades like this that give you that clear opportunity, the clear kind of line in the sand. You're saying, around 300. Gives you an opportunity to put a buy stop in there and just kind of wait for it to trigger. And if it doesn't, it doesn't. But if it
works, it does.
Then you caught the move. I want to ask you, I want to flip it around and ask you the exact same question that you asked me, which is, you got a bunch of gaps on this chart. I mean, obviously the one kind of, in the short term from 2024, but also looking back to the left side of this thing, you got a couple of those. How do you handle gaps? What do you think about those?
For me, here's what I tend to do on every gap, and this is not, I mean, I just brought up this chart on the fly, but charts that I save that are like really important, I do an Arthur Hill technique, which is basically make it a little shaded area. I did that very poorly. So I will say, yes, fill it. Yes, make it a lighter color. I kind of do I kind of do this, where I take the gap and I kind of make it a support and resistance range. I think of this as kind of a magnet for the price, and then I always extend them as far out to the right as I think they're meaningful. Because I found that we always sort of often gravitate back toward those gaps. So thinking of it as not a support or resistance level, like I think 300 is a clear resistance level. This is more of a range, and I know if and when we get back to that point, it's going to have meaning. So my chart of the S&P has the most recent gap that we just experienced over the last month clearly highlighted on my chart. Those are always sort of important levels to pay attention to. And I think of it as a support and resistance level. I think of that as a magnet. And that's why if we do break out here, that would be the immediate next place I would expect. Because a lot of people notice those gaps. A lot of people will put orders around those gaps, and they often will serve as support or resistance as a result.
Great answer. Great answer.
There we go. Your chart number 4.
All right.
As we continue on.
Chart number 4 for me, kind of back to the tech space, similar to a pick that we actually had from one of the previous episodes. This is going to be DAPP, D-A-P-P. It is the VanEck Digital Transformation ETF. So a lot of crypto exposure in here, but it's kind of the pick and shovel approach to crypto, if you will, plus a lot of other stuff, kind of the fintech built in here. Square, I think, is or Block now is a big component of this ETF, one of the top holdings. So a lot of kind of just financial revolution, fintech kind of thing, and a lot of crypto exposure on top of that. Technically, though, that's what I like about this. You can talk about the theme. You can talk about, okay, it's a space that's continuing to grow. You know, crypto's getting more ETFs and stuff. It's probably not going anywhere. But more importantly for me, this is just technically one of the things that I do think is trying to make that beautiful breakout. So you can draw that clear line in the sand. And again, with that last price reference line, you can see that we're right there right now. That thing is just drawn right across those tops. We've been putting in higher lows on the way up as well, kind of bouncing off some of those key moving averages. We're now riding that 20-day higher, and this thing just needs to start moving up. To me, it's a pretty simple line in the sand kind of pick. If it's trading above roughly 1250, this thing could continue to run higher. Below that, not necessarily making the breakout. I want to see this actually go higher. Make that breakout, hold that breakout, ideally come back down to kind of test it from the top. But this thing is threatening to make that move higher. A lot of relative strength out of this. I mean, it's a space that's just heavily outperformed the market. You can see the size of that outperformance with this relative strength panel up top. So this is a very, very volatile space, a space that absolutely moves when it does go. What's interesting to me, you and I were talking about this a little bit before the show. This is a trade that I've struggled to put on, to be honest. My system that I like to trade and kind of my risk reward, risk tolerance, all of that, I like to use a bracketed stop system around about a 10% stop loss. So I'm always drawing, measuring down on the charts, where's a 10% loss? If I buy this breakout, where would a 10% loss be? And generally, I'm trying to get that kind of in the meat of the move. So, I would want a 10% loss to be somewhere kind of in the meat of this consolidation range so that I've got a lot of sort of price action to chop through. Before I actually get stopped out of the thing. This thing, a 10% loss is not very far. It's this thing really, really moves when it does go. So a 10% loss doesn't actually get me that far, and for that reason, I've actually struggled to put on this trade. If you've got the stomach for it, though, if you can stomach the volatility in this thing, it is one that can really, really fly. So sort of you've been warned, but technically a really great setup, I think.
It's probably call it an ascending triangle pattern. I think better than anything, right? Which
beautiful.
We're kind of right at that point where if we do break out, the upside is pretty significant.
I mean, if you draw that trend across those lows there and that flat line, this is about as perfect of an ascending triangle as you can find.
So, question on this one, right? So this is an ETF that I would guess owns like Coinbase would be in there.
Coinbase a big holding.
MicroStrategy probably.
I think that's probably the
high-flying names. So how do you decide own an ETF with a lot of holdings versus take a shot at MSTR, which is a leading name? What's the decision there for you?
I think you can do that, but I think this is a space that's sorting itself out right now. We don't know who the winners are going to be. We know that someone is going to be the winner.
The theme is going to work.
The theme is going to. It's a lot. I approach that space a lot like biotech. So in the past, I've played biotech many times. I haven't really wanted to play any individual biotech name because they can be so subject to
much risk.
They miss on an earnings report, they get slammed by 50%. They have a drug that doesn't get approved, it gets slammed by 70%. It's crazy individual names. But overall, biotech as a group, as a space, a great one to watch. You've seen kind of the same with semiconductors. Maybe tough to pick the individual winners. In NVIDIA aside, you can play the space. You can do the same with so many different areas. So to me, this kind of DAPP and the other one I think is BITQ, BITQ. They give you an opportunity to play the space without picking individual names, which could be a great way to approach it. So that would that kind of
company-specific risk is a killer, and the ETFs like this are great for because the names will sort themselves out over time. The theme will probably keep working if it does, you've got a good exposure to it.
But speaking of those holdings too, it's a great way to follow this ETF. So if it is something that you buy, a great thing to do is go track the individual holdings, pull up those charts, monitor those positions. right? And keep an eye on the actual, the big holdings of the ETF. That'll give you kind of an early warning signal if you see some of those start to break
stock
down.
charts trick then for that, because I 100% agree. I always look at the holdings of the ETF and make a chart list in order with the biggest weights on the top, and just keep reviewing that once a week, once a month, whatever's the right period of time. Because those charts will tell you when that ETF's probably not a good idea anymore, because the biggest names will start to struggle, and then you know something's up.
Absolutely.
Good idea. All right, my fourth pick.
What do you got?
Carnival Cruise Lines, which have been probably, arguably the biggest theme this week, besides all the AI and all the technology starting to work a little bit, maybe. It's cruise lines starting to do well, and they're all kind of improving, right? Royal Caribbean, Norwegian, Carnival, all tend to move as a group, but I would say from a technical perspective, CCL probably has the most constructive configuration.
It does.
When I was talking about Charter, which is a name that had been beaten down for quite some time, it showed that sign of a positive rotation. And I would say, while Carnival did not get as beaten down as a Charter, it really has shown a lot of similarities in terms of the improvement that we've seen over the last 6 to 8 weeks. And again, simple exercise of higher highs and higher lows. We were below downward sloping moving averages. Now we're above upward sloping moving averages. I like the fact that the momentum has improved. Generally speaking, a stock making new highs where the RSI kind of remains above 50, that's kind of just a nice chart you kind of want to own, because that happening over time is what longer term uptrends are made of. I would say why this is an important chart to watch. Number one, because I think it's a compelling idea here going into the summer, into the fall months. I would say from a technical perspective, we are bumping up against some major league resistance kind of in that $19 to $20 range. This is where Carnival topped out in July. This is where Carnival topped out in December. And now we're kind of going back up to those levels. So I think the risk of this trade is that we're limited up to those points. So this is the type of chart I would probably think of as like a partial position, right? You take an initial position when it seems clear that we're having that initial run higher and the momentum is improving. You complete that position when the chart has proven that you're going to get above resistance, because this stock above 20 means that a bunch of new buyers are coming in and feeling really good about owning it, not just at resistance, but above resistance. So this is the kind of thing I'd probably be more tactical, or maybe take an exploratory position here and then sort of fill it out as the proof is in the price and we continue on. But interesting setup, and this week is certainly showing some renewed strength in some of these names.
I never thought I'd compare these two, but it's interesting. If you look at the chart of the previous thing that we looked at, DAPP, and you look at the chart of this, they almost look the same. They're both printing this beautiful
lot of similarities,
triangle, right? Look at that. You got your flat line going across the top, and you got your higher lows, and you can draw that trend line across the bottom. That's an interesting group to compare. This thing is beautiful, though. It gives you, like we just said, it gives you that horizontal line to play. You kind of know your entry, you know your risk reward that you can set off of that. There's a lot to like on this.
And it's funny, I think as we have talked every month about just how we think of these and how we approach individual charts, I think one of the great benefits of technical analysis, it gives you a structure, right? If you think about how do I trade this, how do I, what sort of position do I take and what levels do I use? I think technical analysis is a brilliant way of just thinking about what levels have been meaningful, thinking about what a stock has done in previous cycles, and using that as a framework to how to structure a trade. I think that's a tried and true approach, and I think a chart like this shows you that set up pretty well.
I want to ask you how you think about the weekly on this. So I know if you zoom back on CCL, you get kind of a different perspective, but how does that impact your view of the shorter term?
So what I love about this one on the weekly chart is that break above $20 is even more awesome on the weekly time frame, right? So the daily, and this is when do you go to a weekly chart? I would say as much as you can, but especially when you have a daily chart that's breaking out, you always want to, right, when in doubt, zoom out. Look at a larger time frame and see how it fits into the overall picture. When you look at the weekly chart of Carnival, overall, this has been a pretty depressing long-term story, really peaking out in 2017, 2018. It was in a pretty consistent downtrend going into the COVID peak, right? A lot of stocks kind of peaked out and then rotated lower. This got absolutely crushed because it was already deteriorating well. For years before the COVID peak, this was a space that was struggling. You had that really nice rally in 2021, but it made new lows. It was undercutting the COVID low in October of 2022. But I think on the flip side, you get above 20, and all of a sudden this looks like a big weekly ascending triangle pattern, and that really suggests much further upside. So I think the breakout story even more impressive on the longer term time frame.
A lot of overhead supply to work through, but
For
if
sure.
it can do it, that's a sign of strength.
It has to start somewhere. We'll see if it can get there.
That's a good one.
All right, your last pick. Finish
My
this off.
last pick is going to be waste management, WM.
Okay.
Some interesting things about this. So first off, I like it in the short term. I like it technically. We're seeing this beautiful, beautiful uptrend. Look at that thing. And then a really nice tight consolidation range in that. You can draw a beautiful rectangle around that thing, and it's just it's perfect. We're seeing the 20-day start to cross back above the 50. We've seen a big run higher off the bottom of that consolidation range here in waste management. Now we're trading right up near the top, so I want to see this thing make the breakout. I need a little bit more proof from it. I think it does need to pause here at the top of the range before you can really say that it has made the breakout. So might be an opportunity to, once again, let it kind of digest around those tops, put in a buy stop, and hopefully catch the move on the way up. Relative strength is starting to pick back up, though. We've seen this thing outperforming in the last couple of weeks. So I do like to see that kind of reversing the underperformance that it had been seeing. But this is consolidation within an uptrend. I like to look for those kinds of things. If you can catch those breakouts, you're looking at a winner that's taking a pause, kind of catching a break, and then starting hopefully to resume again. So I'd like to be able to play those things. Once again, gives you some nice risk-reward levels to play with too. So you know the top, but you can also, we can measure this down. You can set these, set your stops. Here's a 6.5% basically drawdown from top to the bottom of that range. So that gives me enough meat when I talk about my 10% stop loss. That gives me some nice meat to play with there on that pattern. So some good things that I like there. What's interesting too, waste management has a bullish rating on the Chaikin power gauge, something I actually meant to mention on Adobe as well. So this is a panel that you can pull open from the right side of ACP. It's going to bring in a whole bunch of factors. Mark Chaikin, a storied analyst, has really built his career around this Chaikin rating. It brings in a whole bunch of different things split between financials, earnings, technicals, like we're looking at, and then also expert opinions as well, analyst ratings and things like that. So a bullish rating on the Chaikin power gauge is pretty strong. Adobe had the same kind of thing. I like to look for that as a filter. I've been using this plugin more and more. It's a great way if you've got 3 or 4 stocks you're trying to pick between, and they all look great from a technical perspective. You pull up the Chaikin rating, and if one of them is bullish, one of them is very bullish, and one of them's neutral or bearish, it's a great way to filter those out and say, well, okay, if they all look similar from a technical perspective, why not pick the one that Mark's methodology is rating as a really bullish name or a very bullish name. So it can be a great sort of extra little factor in your analysis, similar to the scooter ranking. You can do a similar thing there if you're comparing, one stock has a scooter of 50, the other stock has a scooter of 85. Why not go with the one that has a stronger technical ranking? So I like the bullish rating here on waste management. Final thing I want to say about it too, though, bringing in that multi-time frame analysis like we're looking at with CCL and some of these other names. This is, waste management is an industrial name, but it's almost like the staples of industrials. I mean, you think waste management, waste disposal, no matter what happens in the market, we're still all going to have trash, right? We're still all going to have things that we need to get rid of. So waste management, I think you can see it in the long-term trend. It's really kind of a staple of the industrial space. But it's actually been a huge outperformer. I mean, it's outperformed the total market over the last 7.5 years by a pretty substantial margin, and a steady trend. So you're seeing not only a consolidation range within a short-term uptrend, you're seeing a consolidation range within a broader uptrend. And this made a multi-year breakout not too long ago. So you're sort of catching the potentially the next leg higher, the next kind of stair step up. So a lot to like here, I think, on multiple time frames for waste management. A good Chaikin rating as well, which is a nice feather in the cap for WM here.
This is an interesting one, especially because the daily chart especially, you talk about your stop, thinking of like a 5 to 10, you were thinking more like a 10% stop. I mean, the lower end of that range, like 6 to 7% down. It's also a big round number of 200. You've got the price gap not too far below there. It's like with a couple of levels, you have that same sort of percentage in mind. How do you, when you're using stock charts and actually tracking trades that you are putting on, what would you use to visually define a stop? Do you have an approach that you use?
That is a great question. I like to use the horizontal line indicator.
So
you can actually put these horizontal lines directly on your chart. Let's say you actually bought waste management. You can come into the settings area over here, and you can actually add a horizontal line to this chart. So, let's say you bought it at 210. We'll not use a nice even number. I like to use a green horizontal line for my my entry points.
Yep.
And you can actually save that with the chart. So let's say you bought Waste Management at 210. You save this to a list in your account with all your positions in it. Every time I pull up that chart of Waste Management, I know exactly what my entry
Where
was.
are we at for my entry point?
And I can do the exact same thing with my stops. I can do the same thing with price targets as well. So let's say our stop was, well, you mentioned 200. So let's say your stop was down at 200. You could set that up with a horizontal line value of 200. I like to use a red line for my stops. And I would obviously have multiple, a green line and a red line. But it means that you can put those stops, you can put those markers right on the chart.
Yep.
And as you zoom in and zoom out, you can zoom all the way out to a long-term chart here.
Yep.
Those lines, because it's not an annotation or anything, those lines are actually going to stay with the chart.
Love it.
So really, really nice little trick there. You can even change periods and do a whole bunch of different things. So yeah, I actually have built into a lot of my chart templates. I've got a horizontal line for entry point, horizontal line for stops, horizontal line for price targets up above my entry points where I want to add to that position, different things.
I got
even
it.
one for caution actually. That's kind of above my stops, between my stop and my entry.
Yeah.
It's basically a caution point that's like, hey, if this trade gets down to this level, I know I'm not going to get stopped out, but I should really think about getting out of it.
Rethink.
The trade's not working. Let's rethink this
Yeah,
thing.
right.
So yeah, horizontal
love
line's
that
a great tool for tracking your trades.
And then saving it in a chart list, right?
Exactly.
So you can go through your
Save it in a
portfolio.
chart list.
I
Yeah.
love that approach. Good call.
Yeah.
All right.
What's your last one? What
My
do you got?
last chart, I'm going consumer staples because we've underappreciated that sector so far.
That's true.
Let's get there. So Altria Group is an interesting one. I mean, the tobacco names overall have done a little bit better. I was looking at BTI this week as well, which is really starting to improve. And I debated between the two of these. I think BTI is another good one. I would probably put the two of these together for different technical reasons, but the theme is really starting to work. I think the interesting point about Altria right now, number one, it's making a new 52-week high this week, and that overall is what I initially saw it for. And I've been tracking this as it's been making new 52-week highs a number of times here in 2024. But what's interesting to me, if I make like a 1 year, I'll make a little shorter pattern or a shorter time frame. You probably call this a broadening top pattern. It's not taking as much time as I would probably, this is usually a multi-month kind of pattern, but I think visually you can see that the range is fanning out. So it's sort of like the reverse of a symmetrical triangle or a coil pattern where the range is narrowing. Here the range is actually widening. So it shows you we're making new highs, but on increasing volatility.
Yeah.
And for me, this is an interesting chart to follow, number one, because you wait to see that pullback. And the way that this pattern usually breaks is either from the low, we rally and don't make it anywhere near the upper boundary, or we make a new high and then we pull back and make a higher low. And whichever one of those happens, that usually tells you something's changing. That tells you that pattern is no longer kind of active. We're sort of, we have new buyers or sellers coming in that are breaking that pattern open. So I think looking to see this as a potential breakout candidate, see if it can follow through above 46, which is, I think, is sort of that initial breakout you're looking at. But see if we could put a higher low around like 45 or so. And if we can do that, and the momentum stays overall pretty strong with the RSI around 40 or 50, I think that could be a really interesting setup and really tell you that the tobacco trade maybe is working a little bit further into the summer.
Yeah.
But worth noting that in consumer staples, which is not a sector you would normally go to in a period of market strength, the charts are telling you it's a good place to be. And by the way, I'm looking at the unadjusted chart here, or the adjusted chart just for time, but this is also a really heavy yielding name. So 2 of my 5 charts to watch have excessively high dividend yields. And again, I think for me, that's a good way to play. Strong charts with strong dividends, I think, is an interesting approach right about now.
Especially when you start to get a little more cautious on the market, I think that's a great place.
Right?
That is a high yield. That is a big old.
It's a crazy yield, and that's the reality with a lot of these that have been beaten down or below, some of the levels that they've been at. The yield is really, really high because they're still paying a decent dividend. The price came down, and as a result, it's a pretty good place to be.
I got to say, I always laugh when anyone talks about Altria because I feel like this is the best test of whether or not someone is a total stock market junkie.
Yeah.
If you can name the ticker symbol of Altria when someone says, what is it?
Yeah.
If you can just rattle it off, you follow the market.
That's right.
Because it's one of those, like NVIDIA, okay. Microsoft, okay. Altria, if you get
this is
MO,
getting down the list of tickers.
it's like,
you should
that
know.
one makes no sense. And if you can still rattle it off, you follow the markets. Oh, that's a good pick.
It's
a good
true.
Pick.
So how is this? I mean, picking 10 stocks, I don't know. I mean, some of these months have been pretty tough. This one wasn't bad only because I'm finding that there are charts starting to work. And I think that's an important reminder of, while it feels the market is super extended, a lot of the charts that we've highlighted are not necessarily extended at the moment, right?
Yeah. It's a funny time because, while I do have some concern, not a lot of breakouts that we're finding, all the stuff that we talked about at the beginning of the show, at the same time, for the way that I approach stock picking and things like that, it means that those lists are a lot smaller.
Yep.
And so there's actually fewer things to filter through.
There we go.
So in a strange backwards kind of way, choppy times, cautious times actually become the easiest times to pick stocks because the leaders really, really stand out. The lists of number of things that you got to look at becomes a lot smaller. I'm finding that right now. The lists are just a little bit smaller. It's not as many things that you're sorting through. As opposed to the middle of 2023 when everything is flying higher and you're looking at lists of 200 stocks.
Well, we'll see what the lists look like next month when we reconvene to talk about August. But for now, some great charts, and thanks, Grayson, as always, for joining me.
Of course, fun to be here.
All right, folks, that's it for our special edition of the Final Bar Top 10 Charts to Watch for July 2024. Thanks so much for watching all of our programming here on Stockcharts TV. For Grayson Roze, I'm Dave Keller from Stockcharts.com. Be well, stay safe, have a great weekend.